Good evening, respected colleagues. As always, Sunday, as always from rainy Petersburg, Dan Strelkov, ForexTimes project. And as always, I invite you to the ForexTimes Community Comfort Training. I will open a really new universe for you. You will learn a lot. Interesting thing that you've probably heard before, but didn't understand. How can this be used? And together we will achieve very good results in trading. And today, as always, let's review the likely movement of trading instruments for the upcoming trading week. But I'll tell you right away, except for the euro, in principle, nothing. There won't be anything significant for us specifically. Let's get going. The euro, surprisingly, which is interesting, continues. The Commodity Futures Trading Commission report shows a 1% increase in buyers, unfortunately. The capitalization of the trading instrument has decreased by 5% to 206,302 million, which tells us that if there will be growth, this growth is most likely, even though it is trending due to an increase in buyers, it will probably be sufficient. Let's see what we have on the euro from a global point of view. And globally, we have on the euro is the movement continues. We have a corrective structure. Let's call it ABC or WXY actually. There is no big difference here, but let's call it ABC and our correction wave ends. So what are we expecting? There is an impulse movement. There is a correction in the form of a flat. And actually we expect the growth to continue to the impulse. And you, dear colleagues, know what we need to do to trade. It's important to understand one simple rule. The trend, or friend, what is a trend? Right? It's impulse correction, impulse correction, impulse correction. Trend is our friend. If we see an impulse with you, after the correction, we consider various options for purchases. At the moment, it is an ascending trend. The same thing, absolutely on a downward trend. And you know that impulse is mostly a 5-wave for us. Pulse formation in the form of 1, 2, 3. It are fit 5 waves where there are certain rules. And again, I hope you know them. The third wave should not be the smallest, and the minimum of the fourth wave should not overlap the maximum of the first waves, excluding the fourth wave can overlap. 1, 2, 3, 4, 5. The fourth wave can overlap the maximum of the first wave only if a diagonal is developing with us. And the diagonal rules say that the first wave is the biggest, the third is smaller, the fifth is even smaller. The second wave is larger than the fourth. The fourth wave necessarily overlaps the first wave. It's a diagonal. Diagonal, what kind of waves? Initial and final. The initial diagonal is the beginning of the impulse movement, either in wave A. This could be a correctional movement, but again, it will be quite deep, most likely, or it will be wave number 1, the final diagonal, or it's wave C in the correction, or this is wave 5 in the pulse. Therefore, dear colleagues, remember impulses and diagonals. We simply have to define them. But however, you can trade corrections if we have an obvious impulse movement and then a complex correction. Let's say 1, 2, 3, 1, 2, 3, B, and 1, 2, 3, 4, 5, for example, C. Then you can try to catch the fifth wave C. Why do I say the obvious? Because it should be obvious. Straight A, B, C, A, B, C, and preferably in this wave C of the younger order, wave B of the higher order. If we see more, a small final diagonal, it's a gift from heaven. About that, kids, you can work in wave C correction. In other remaining correction options, it's better not to work with them at all. Well, let's go for the euro. We finished the introduction. Let's see what we have for the euro. As I already said, we are at the extreme, the last one in terms of the euro. We really want to buy during the corrective wave C, and our colleagues, whom I sometimes observe, in principle, they prefer to talk about what is most likely here with us. The initial diagonal is developing in wave number 1. We are now in correction wave number 2, and we will start to correct to the impulse wave number 3. You can start buying. Let's see if that's really the case. The thing is, if we decompose wave number 2, the so-called, then we will see here 1, 2, 3, 4, 5. We will see here the impulse. Well, this is a wave, and this is a wave B. But then in wave C, we should see either a 5-wave structure or a final diagonal with you. We most likely won't be able to see a 5-wave structure here for the simple reason that difference. I apologize. Yes, you're absolutely right that you got confused. I'm sorry. Everything is correct. For the simple reason that was 2, 3, 4, 5, and the fact is that wave 4 overrides minimum of the first wave. It really overlaps here. I have checked. Therefore, dear colleagues, we will not see an impulse in the form of a 5-wave structure in wave number 6. There is only the probability of forming a final diagonal. If we see a final diagonal, we can consider purchases. But there is a big but, dear colleagues. The fact is that we have professionals at the Chicago Mercantile Exchange, and professionals from the Chicago Mercantile Exchange show us their expectations, their intentions of option contracts, calls, and puts. I am marking on the charts these option contracts with maximum, with open interest. What do professionals use them for? They use these option contracts data for hedging their futures transactions. Call equity contracts is used for hedging futures transactions for sale, put option contracts for purchase. So please take a look at what happened with the monthly contracts a few days ago. Expectations of professionals have changed. Expectations for pot stock contracts have decreased. Expectations for call stock contracts have decreased. And this is nothing more than the strongest levels of support and resistance, support, and the price is currently near the resistance level. What does this mean? The price is likely to continue falling. Moreover, you see a concentration of net equity contracts worth more than $500 million. But these were monthly auction contracts. What about our Monday auction contracts? The thing is, it's the same. Please take a look. The market is growing, and I believe it's still a correctional growth. And please look, the market has grown, but professionals, they lowered their expectations for call auction contracts and lowered their expectations for put auction contracts. Therefore, this is our strongest resistance range, and this is the strongest support range. And in the strongest support range, as you can see, we are still clean with you. Professionals opened equity contracts in CAD for $263 million and also for $76 million. And here, as of last week, that 16,093,79 was opened, and also a little higher, 113. 291 and $7 million. The thing is, dear colleagues, that we have a minimum value. If this minimum is broken, so this is by no means the initial diagonal, and this is a normal correctional movement. And for some reason, I think that this is just a normal correction movement, as I can write here. Find the initial diagonal and depict it as A. Then this movement can be depicted as B, and this movement can already be depicted as a final diagonal 1, 2, 3, 4, 5 like C. And all this will be a correction movement, not an impulse. And now we continue our movement down. Dear colleagues, there is a high probability that the euro has not yet finished its downward movement. And if you really want to try to buy, let's wait for it. Hypothetically, if the price comes into the strongest support range, we'll wait for a pattern here and try to work it out. A corrective movement. But as I mentioned at the very beginning, dear colleagues, it is better not to work with corrections at all or to work with complicated corrections. 1, 2, 3, 1, 2, 3. And here, if the triple is obvious, so again, 2, 3, 4, 5 can practice this. Correctional movement in a potential wave C. That's what awaits us. Theoretically, for the euro dollar for the upcoming trading week, but as always, there's a but. If suddenly I'm not right, and we will see a little more decline and then a sharp upward impulse. Then, of course, I will write in the daily forecast that impulse, after which correction, and we'll already be trying to enter on purchases. Even perhaps not because it will be a continuation of the pulse, maybe. This ABC correction will be W. Here we will see X, and then we will go for a correction here. But in any case, the UI correction could begin with an impulse movement. From the impulse movement in wave A, then B, and then wave C. So actually, yes, by the way, I think you're sitting and thinking, so what to do? I've already said what to do. We wait for a potential drop in the euro. Range at level 104.20. And when a buying pattern arises, purchases can be considered. And yes, dear colleagues, and if at this moment, while the price will be slowly but surely decrease, our volumes will also decrease. This will indicate the fading of this movement, which will only speak in favor of our theory about purchases in the corrective movement. Gold. And with gold, it's better to do nothing, not touch it. I hope none of you sold without a stop loss. I know 2 or 3 people who wrote to me, Dan, we sold without a stop loss. What should we do? How would Dan know what to do if you sold without a stop loss? You need to call the Middle East and ask all the countries that are creating there now. A very bad situation. When will you finish this, dear ones? Friends, but no one will tell you anyway, because no one in the world knows this. And gold actually reacted to everything happening in the Middle East, of course, with growth, because investors don't like risk your money. What about the risks? For the global economy, for the entire global situation, it's always a purchase, gold. This has historically been established among investors. If something can sharply affect the world GDP, world inflation, or the world political structure, investors immediately start investing their assets in gold. The only thing is if you bought and are currently holding the purchase, then I can say that for you, it's probably still time to grow. For the simple reason that if we try to consider this momentum movement, we will see that it would seem we have an impulse in the form of the first wave, second, third, fourth, and fifth. Perfect. But if we decide to count, I assure you the third wave will be the smallest. Between the first and fifth, I've already counted, and in the impulse motion, the third wave can't be the smallest. So, dear colleagues, this is not an impulse from the point of view of the classic impulse 1, 2, 3, 4, 5. This cannot be, of course, the initial diagonal for the simple reason that, first of all, wave number 5 is much larger than wave number 3. This no longer converges at all. But the hypothetical wave 4 is not. The wave 1 did not absorb the maximum in any wave. What can be here? Why did I say that those who bought can still rejoice? The point is, dear colleagues, would this be a stretch? The first wave, the second, and stretching in wave number 3 with a higher order waves of a lower order. That's it. In this way, yes, just like this, I've somehow brought the grade up high. Now I'll bring it back here. Yes. So 1, 2, 3, 4, 5. Here the third wave is not the smallest first wave. The maximum of the first wave, in my opinion. Let's have a look now. Yes, it's not absorbed with a potential fourth wave. And actually, this could just be a stretch of 1, 2, 3, 4, 5 in the third wave. The fourth wave is still ongoing. the fourth wave, then there might be a fifth wave. And the fifth wave, again, if we had a stretch in the third wave, then most likely the fifth wave will be roughly the same as the first one. So actually, you can still be those who bought. You can still support open positions. Those who sold without a stop loss, there is a high likelihood that you are still in for it. And most likely it will hurt even more. But again, no one in the world knows what will happen at this moment. And as for the S&P and Dow Jones indices, you know that I don't believe in the American corporate sector due to high interest rates. Even that interest rates are likely to rise further due to that 100. Energy resource prices have already started to rise. Gas has already started to rise. And oil is still not showing very active growth. It is currently in a downward correction. But dear colleagues, if believe that it's an impulse, oil is currently in a corrective phase, after which, ending the corrective movement, most likely oil prices will start to rise again in an impulse movement, which means that growth to $100 per barrel is generally in the next month and a half or two. It's very possible, therefore, dear colleagues, high interest rates, growth on energy carriers, the terrible indebtedness of the American population. All this plays against the corporate sectors. So even the largest companies that are included in the S&P 500 index and are pulling this entire index is literally 70 giant companies. Well, you know such: Microsoft, Coca-Cola, Apple, etc. In my opinion, there are 4 or 5 of the largest companies. They are pulling the entire index onto themselves at the moment, but even they might stumble. So I won't say anything about the S&P 500 index for the upcoming trading week, for the simple reason that we most likely have a B correction, 1, 2, 3, 4, 5. 5-wave structure in wave C, W. Now we have A, buyers, with the likelihood of X waves, we might see a drop in wave Y. Therefore, dear colleagues, I do not propose you to consider buying index in wave C, but I suggest waiting for the likely growth, and then in a week or two, we will consider selling in wave Y. The same applies to the Dow Jones index, but only if the S&P 500 index. It is hard for me to predict. The target levels are clearly visible in the Dow Jones index with a target level of 31,000, 1, 2, 3, 1B, 1, 2, 3, 4, 5S, and now it was, and C is likely to fit to the strongest level of resistance, and this is a hedger from Sleepsons. Professionals with a huge amount of futures contracts for sale will meet us here, and we are likely to go down to the 31,000 level in wave Y from wave X. I really want to see this standing. Dear colleagues, I assume this will happen in 2-3 weeks, both in the S&P 500 index and in the Dow Jones index. Gold, it's better not to touch it at all if you're not a genius, because I am not a genius. I will not touch it. As for the euro, I've told you everything I could, all untold, and also talked about impulses, and please kindly remember the corrections today. This is the basis. The basis is trade trading on Elliott waves and searching for patterns to enter the market. Thank you very much, dear colleagues, for listening today. You have been with Dan Strelkov. Join the Forex Times community. Never spare. Please refer to me directly, and possibly I will give you a 50% discount on the lifetime subscription. How much it will cost, I will answer you later. Just personally tell me the YouTube promo code, please, and then we'll chat about the discounts. And for now, goodbye to everyone.